Back in July, Congress passed the Genius Act to regulate stablecoins, and the result was that ETH rallied up by 50%, with Sol experiencing explosive growth a few weeks later. Since that time, everyone has been wondering what catalyst will cause the rest of the crypto market to experience the same explosive growth. The answer could be the Clarity Act. That's why today we're going to tell you everything that you need to know about the Clarity Act, including what it is, when it could pass, and why altcoins could be doomed if it doesn't. My name is Lewis, and I'm a new host here. You will have seen me on the Coin Bureau news as well as many videos on more Coin Bureau. I'm excited to be part of the Coin Bureau team and bring you many of the videos that you know and love. But for now, let's dive into the Clarity Act. Now, before we get started, nothing in this video is financial advice. It's for education and entertainment purposes only, intended to inform you about the Clarity Act. If you find content like this helpful, then do us a favor by smashing that like button because it really helps us out. Now, let's begin with a bit of context and explain what the Clarity Act actually is. In a nutshell, it's a market structure bill that aims to provide some clarity, shocking, I know, about which regulator should be calling the shots when it comes to crypto. The Securities and Exchange Commission, or SEC, or the Commodity Futures Trading Commission, or CFTC. To determine this, the Clarity Act sets out the legal definitions for things like blockchain, digital assets, digital commodity, and mature blockchain systems. Basically, if a digital asset, like a token, is tied to a centralized project, then it's a digital security, regulated by the SEC. If it's part of a decentralized, mature blockchain, then it's a digital commodity, regulated by the CFTC. But here's where things get interesting. The Clarity Act also introduces something called investment contract assets. What this means is that tokens can switch categories over time. If a project starts centralized, it's under SEC's oversight. But once it meets the criteria for being mature and decentralized, it becomes a commodity and shifts to the CFTC's oversight. But it doesn't stop there. The Clarity Act also guarantees the right to self-custody, ensures that the rules around existing TradeFi products like futures, swaps, and securities are unaffected, and encourages global regulators to extend existing anti-money laundering or AML frameworks to include the crypto industry. Not only that, but the bill also provides long overdue investor protections. For example, it increases transparency by requiring projects to regularly disclose their financials, token supply, developmental progress, and risks. And under the bill, the SEC and the CFTC will work together to create processes to remove dodgy tokens from trading platforms. If all of that wasn't enough, the bill even allows projects to raise up to $75 million a year without needing to register with the SEC first, so long as the project is expected to become a decentralized commodity within 4 years. This paves the way for many altcoin projects to hit the ground running, supercharged both with innovation and investment. As you might have guessed, the Clarity Act builds on previous regulatory efforts, including bills like FIT21, the Loomis-Gillibrand proposal, the Digital Commodities Consumer Protection Act, and the Securities Clarity Act. Each of these bills failed, but they ultimately led to the Clarity Act being drafted. The Clarity Act itself was introduced on the 29th of May this year by Representative French Hill, chair of the House Financial Services Committee. It was one of 3 major crypto bills debated by the House of Representatives during its so-called Crypto Week back in July. The other 2 bills discussed during Crypto Week were the Genius Act, which regulates stablecoins, and the Anti-CBDC Surveillance Act, which prohibits the creation of a central bank digital currency, or CBDC. Notably, the Genius Act was already passed by the Senate the month prior and was signed into law by the House during Crypto Week with a vote of 308 to 122. This meant the Genius Act is now law, and it's the only crypto bill that has been signed into law so far. The House passed the Clarity Act with a majority 294 to 134 vote, but it still needs approval from the Senate. The Anti-CBDC Surveillance Act also received bipartisan support in the House, but barely scraped through with a vote of 219 to 217. Certainly puts the priority of some politicians into perspective, doesn't it? In any case, these recent developments make it clear It's a question of if, not when, the crypto market will experience explosive growth, including altcoins. And if you're looking to trade crypto, then you have to check out the Coin Bureau deals page. That's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges. All you need to do right now is hit the link in the description or scan this QR code. Once you get on the deals page, you'll see all of our offers across a range of exchange partners. Just click one of the sign up now buttons and that should take you right to the deal. And remember though, these deals, they won't be around forever, so take advantage of them while you still can using the link in the description below or by scanning the QR code on the screen. So, the Clarity Act was passed by the House in July, but still needs to be passed in the Senate. Originally, this was expected to happen on September 30th. But, well, this is crypto, folks, and nothing is ever that simple. Put simply, politicians can't agree on what's best, which shouldn't really be a surprise to anybody. There's also some disagreement about the Clarity Act, too. That's because Senate Democrats are calling for increased collaboration on the bill, emphasizing the need for bipartisan cooperation. And there's the usual suspects like Senator Elizabeth Warren, the Cruella de Vil of crypto. In July, Warren warned that the Genius Act and the Clarity Act could, quote, blow up the entire economy. Her argument is that under the Clarity Act, companies of any kind could avoid SEC scrutiny by simply digitizing themselves on the blockchain. On top of this, the Clarity Act faces further delays due to the leader, or lack thereof, of the CFTC. Brian Quintenz was Trump's top pick as chair of the agency and was expected to fill the role by the end of July. However, Quintenz's appointment was stalled, reportedly thanks to the Winklevoss twins, who you'll recognize as the billionaire founders of crypto exchange Gemini. Basically, the Winklevi spoke with Trump, basically arguing that Quintenz wouldn't shake the CFTC up enough. This leadership vacuum created uncertainty around the agency's regulatory approach and capacity. Note that Quintenz was a strong proponent of the Clarity Act, and the delay in this confirmation casts doubt over the act's momentum in the minds of many investors. It's not just politicians that could hinder the Clarity Act, though. And that's because the Senate also has other competing bills, notably the Responsible Financial Innovation Act, or RFIA. The RFIA offers a different approach to crypto regulation, with a narrower scope and emphasizing SEC authority over CFTC authority. The good news, though, is that even with these delays, the setbacks won't significantly impact the Clarity Act, which is still set to be written into law before the end of the year. So, when could the Clarity Act realistically be signed into law? Well, the general consensus is that the delays we just mentioned won't be all that significant, with many predicting that the act will still pass the Senate by the end of October. However, it's quite possible that this is a tad optimistic, given the legislative hurdles that remain. Senator Cynthia Lummis had previously named Thanksgiving as a target date, but in early September said that this, quote, might be too optimistic, suggesting it might not happen until 2026. However, she also added that, quote, it's really important to me that we get this done by the end of the calendar year. It's like being pregnant for 4 years, you know? Please, let it happen. Interesting way of putting it. Senator John Kennedy echoed this sentiment, saying that lawmakers shouldn't be rushing to advance a crypto market structure bill. In his words, quote, I don't think we're ready. People that I talk to still have a lot of questions. I know I still have a lot of questions. Meanwhile, Senator Kristen Gillibrand is reluctant to put a deadline on the bill due to the looming government shutdowns that will inevitably cause delays. She says that, quote, the most important issue that Congress has to deal with right now is the fiscal cliff, and added that it will be a time-consuming process. Translation, crypto isn't really the priority right now. To add to this uncertainty, a planned markup hearing for a draft bill by the Senate Banking Committee was pushed back from September 30th to late October. Meanwhile, the Senate Agriculture Committee has yet to publish any draft legislation. And this is significant because both committees need to be able to support any bill addressing market structure before it can move to the Senate or the House of Representatives. All of this is precisely why analysts are less confident. According to Polymarket, the chances of the Clarity Act being signed into law by the end of 2025 is just 31%, down from a high of 87% in mid-July. So then, a lot of mixed opinions. From our perspective, this could go one of two ways. If everything proceeds smoothly, even after the short government shutdown, we can realistically expect the Clarity Act to be signed into law by the end of the year. However, if politicians continue to butt heads about the bill, or anything else for that matter, then a likely scenario would be that the bill will instead pass in early 2026. If we had to guess, we'd say that this was the more likely outcome. There is one big caveat though, and that's because regardless of when the bill is passed, it technically wouldn't go into force right away. Once Trump signs the bill into law, federal agencies like the SEC and the CFTC will need to write the actual regulations that the crypto industry will need to follow. This rulemaking process is complex and includes drafting, public comment periods, revisions, and finalization. It could take several years before rules officially come into force and have full legal effect. Now, along with all of the uncertainty about when clarity will be passed, there's also growing skepticism that it'll even be passed at all. That's because there are competing bills under consideration, such as the Responsible Financial Innovation Act, or RFIA, that we mentioned earlier. Naturally, this raises the question, what happens if clarity doesn't pass at all? The most immediate consequence would be heightened uncertainty in the market. I mean, even without delving into technical details, the mere rejection of a bill that's literally called the Clarity Act could signal to many that regulatory clarity for the crypto industry is off the table, regardless of whether that's actually true or not. On a more fundamental level, though, the regulatory landscape for crypto in the US would remain uncertain and fragmented due to the ongoing disputes between the SEC and the CFTC about who gets to regulate what, so to speak. Whichever way you cut it, though, the market hates uncertainty. In other words, this would almost be guaranteed to cause prices to crash. It could even become a key catalyst that kickstarts the next bear market. Yikes. For what it's worth, though, this is unlikely to happen. And that's simply because the SEC and the CFTC would quickly provide alternative structures to help regulate the crypto industry. You might recall that back in July, the SEC launched Project Crypto, led by Commissioner Hester Pierce, aka the Crypto Mom. Project Crypto was set up as an initiative to modernize securities laws and regulations to accommodate digital assets and embrace crypto innovation. Meanwhile, the CFTC launched a crypto sprint in August, aiming to expedite rulemaking and guidance within its existing authority, including soliciting public feedback on allowing spot crypto asset contracts trading on regulated exchanges. Both agencies then issued a joint statement in September announcing that exchanges registered with the SEC or the CFTC can offer spot trading of certain crypto products. This decision gives markets immediate clarity on what's allowed under current laws. Moreover, the joint statement emphasizes the need for collaboration between the two agencies, while following guidance from the President's Working Group on Digital Assets. For context, this refers to a report released in late July titled, quote, Strengthening American Leadership in Digital Financial Technology, which outlined recommendations for establishing a comprehensive federal framework to regulate digital assets. And we actually did a video diving deep into this 160-page report, which you could watch right over here. The point, though, is that even if the Clarity Act somehow doesn't make it through its final stages, it wouldn't be long before a new piece of legislation would take its place. Thankfully, crypto regulation has become a bipartisan issue, and politicians are hyper-focused on creating fair rules for the industry. As such, they would quickly table new legislation that would make it across the finish line as soon as possible, if only to avoid the wrath of the president. At this stage, the most likely replacement would be the RFIA bill, but other draft legislation could also be considered in the future. By now, you'll know that the Clarity Act is highly anticipated and is seen as many as an incredibly bullish development for the crypto industry. But what if I told you that actually the Clarity Act could in fact be a bearish development? Sounds crazy, right? Well, maybe not as crazy as you might think. That's because the Clarity Act sets the stage for TradeFi investors to benefit massively from the newly clarified rules on digital asset custody, trading, and registration, allowing them to become major players in the crypto ecosystem. Many would argue that having more involvement from TradeFi is a good thing, as it would mean more money flowing into the crypto markets. The flip side, however, is that the involvement of TradeFi arguably goes against the very ethos of what crypto is all about, offering an alternative to the traditional financial system. This is something that's already happening with the Genius Act, which explicitly requires U.S. stablecoin issuers to be issued by TradeFi entities like banks, credit unions, bank subsidiaries, and federally regulated financial institutions. Stablecoin issuers also need to gain approval from the Federal Reserve and demonstrate their ability to comply with relevant laws before they can issue any tokens. This effectively hands over control of stablecoins, the lifeblood of DeFi, to the very entities that crypto was designed to disrupt. But it's not just stablecoins. Megabanks, including JP Morgan, Citigroup, and others, are actively building their very own blockchains and tokenized payment rails to seize this regulatory moment. Many are already piloting private, permissioned, internal blockchains for everything from instant settlement to programmable payments and tokenized asset issuance. In theory, once the Clarity Act finally goes live, these TradeFi giants will have their infrastructure ready to scale up quickly. And just like that, financial institutions could become the new gatekeepers of crypto. Naturally, this will be a huge turnoff for more than a few investors. But if we take off our tinfoil hats, you'll see that it's not all doom and gloom. The crypto industry is in desperate need for clear regulation, and the Clarity Act provides exactly that. Without clear rules of the road, the industry's disruptive potential will be severely limited. Put simply, the Clarity Act may not be the perfect solution for everyone, but it's essential that it gets passed for crypto projects to freely innovate. Without it, many new projects will fail, and many existing altcoins could be doomed as a result. Thankfully, it's only a matter of time before the Clarity Act, or indeed any other similar legislation, is passed into law. Once the guardrails are in place, you could bet that we'll see a huge surge in crypto innovation, which will send the altcoin market skyrocketing. But what do you think? Will the passing of the Clarity Act mean sacrificing crypto's spirit? Or will it unleash a new wave of growth, innovation, and adoption? Let us know your thoughts in the comments section below. Okay, so if you want to learn about how banks are threatening the crypto industry, then check out that video right over here. And if you want to learn more about the CFTC's impact on the crypto market, check out that video right over here. Thank you all so much for watching, and we'll see you again in the next one. It's Lewis, over and out.